Alrighty guys, I'm going to start doing daily recaps here on YouTube, and I'm going to share my trades, how they went, the outcome, my insights, everything going into the trade, and that way you guys can get somewhat of a semblance of my trading style as well as the strategy that I use to trade on a daily basis. Here is the way that I set things up just right off the bat. Okay, so I go straight into Trendlines, all right, and I go to the 4-hour time frame. Again, we're scalping here. We're doing day trades. Sometimes we'll drop a swing trade here and there, but for the most part, I am a day trader. I go to the 4-hour. That's as far as I'll go. I'll peep at the daily, but I'm more concerned with more localized price action, and so I start on the 4-hour. So 4-hour, I got this long trend line that broke, I don't know, maybe a week or two ago, right? It broke out, it didn't squeaked back in somehow and then broke back out. This is just hyper manipulation from the markets, trying to get people out of their positions and then finally breaking down. Right now that I've drawn a trend line underneath, I always draw a fine one to draw on top, a major one, right? A long one that spans multiple days, and this one goes down to the back to the 13th, right? This trend line here, and then this one here goes all the way back to the 29th of March, right? Almost a month and a half long, right? So this trend line was major. So I find the major trend lines on the 4-hour first before I even think about doing the next thing. So I go from time frame to time frame, and I go and I find anything that is important to identify and make any adjustments on the trend lines, because sometimes the trend lines, as you get in more microscopically, they can change a little bit. So you have to really make sure that everything is scaled to size and correct, right? And if I'm being honest, I got to get a little bit closer to these right about there. Okay, cool. So now that I got that trend line, so now I'm going to go in even closer. So I'm going to get in closer to the price action. Now that I got those major trend lines, and if you want to have extra credit, go ahead and make sure that those longer lines are thicker so that you can have some sort of differentiation and you can tell them apart from some of the more minor trend lines. That would be a more minor trend line. These are the longer ones, right? So go in there and change them up if you want to. Normally I do. Okay, so I got those two major trend lines, and then I have some more minor ones when I go in a little bit closer, right? This is a smaller trend line, but yeah, you have to zoom into what's going on currently, right? So now I'm on the hourly, and I found this trend line here. Cool, perfect. Anything else on this specific localized area? Nope. So I'm gonna go to the 15, and then I'm gonna start looking. And just to be a little bit more precise, let's just knock off where I started the trade. We can have a little bit better of an example here. So now I'm here, right? This is the 9:30 open, and I trade the New York session, which is at 9:30 a.m. Eastern Standard Time. So I block off the first 5-minute candle. So anybody that's been watching me at all knows that I trade the 5-minute candle orb strategy. Again, I'm waiting till the 9:30 open, which is represented by this line here. And I have this here because I already locked up that first 5-minute candle. So I don't want to redraw it. I'm just doing this for demonstration purposes. So next thing I'm going to do at this moment, it looks like we broke through this trend line, came back in, dropped back down below. So we're fighting here, right? And a lot of times during the session, it comes to a narrow point, right? And it can go either direction. Once you get to this narrow of a point, you have a big long trend line that it's trying to break, right? It's gotten closer and closer, and now we're kind of bunched up, and we hit 1, 2, 3, 4, 5, like several hits here on this line. So it looks like it's trying to break through, but you don't want to develop too much of a bias prior to the trade, because anything can happen once the New York session opens and all that volume comes pouring in. So we can go one candle at a time. Let's put it on 1x. So now the next thing I'm going to do is keep going down time frame. So now we're on the time frame that we normally start this trading session on. We got a bunch of little candles. Let's try to push up on the 5-minute time frame, and let's just go candle by candle here. So right here, okay, so we get this rejection candle right off of this move, right off of this trend line, right? And that kind of gives you an inkling in which way the price is trying to push. But again, I wouldn't start before the session actually begins. You can, I have before, but I'm just saying it's probably better if you just wait, right? So it's coming in, it's coming in, it's coming in, and there you go. There's the first big 5-minute candle, is this giant dildo, right? And you want to make sure when it's this big of a range, that first 5-minute candle, it's tough. all right? Because the price can bounce around in here forever, and you don't want a big candle to start your session off, because if you're trying to get in a trade when it leaves the range, either up or down, it might be a while because you got this big area to kind of work through, right? But we already kind of have inklings. I've seen rejection on that trend line, right? And so I'm already starting to form an opinion that maybe we're coming down, but again, you don't want to marry your bias before price action actually starts to reveal itself a little bit more clearly. So let's go to the next candle, right? Bang. Okay, you're thinking maybe I should get in. I don't know, should you? This is why you wait, guys. You wait. You want a candle to close on this side, right? But then you want to wait for the next candle, the retest, okay? And if it goes back into the zone, then probably not a good time to enter, right? So let's just keep moving. You're getting a lot of chop right here. Okay, but you notice that it's not breaking through these trend lines, and so you see a little bit of resistance there. And to be honest, guys, I got in probably, I think it was this candle here, because if you go and you look at my trade, it was this one. So it was this candle here, got a little scared here, and then it just came down. You can see that this is where I exited, was this one here. So right down here, right below the line. So I got in here, entered, exited there. That's not the way the strategy is supposed to be played out. But when there's a big, huge space like this, I just don't trust it to expand too far outside of the range. And if you look at the trade, I think it was like, let's see, wasn't that, was this last one? It was like 23% around there, which is not bad with the allocation that I had. But there's still a move to be made. Sometimes this strategy just doesn't work very well, especially when there's a big wide range like this. And even though you're supposed to enter on one of the edges, I had already entered on an earlier candle, okay? And I guess you would see it better on the 1 minute, because that's what I showed you on the platform that I was training. And it was this guy right here. This is the one that I entered. I just saw that getting rejected. I'm sorry, it wasn't that one, it's this one. So I saw it get rejected again, and here you got triple top. You got 1, 2, 3 abouts, right? You see something like that shows that's major resistance, and that price probably is not going to break through not just one but two of these guys, right? So that's hard to break one or two. And then let's look at the other confluences, right? Because if I bring up the moving averages, we were already bearish as soon as we got under this, and you can tell. And especially if you go to the 5 minute, you got the 200 is on top, and you can tell it was having a hard time breaking above that 200. And this is why you should have multiple views, guys. You should have dual monitors. Your other monitor should have maybe 2 to 4 different time frames, right? Because that way you get the different perspectives, right? And if you're all under the 200, which is this thicker line here, the 200 EMA or SMA or whatever moving average you use, if they're all on top, guys, that was the 5. Here's the 15, right? The 200 is on top, which is bearish. Okay, let's go to the 1 hour. Where's the 200 on the one? It is above, right? Bearish, and it's pointing downwards. Okay, angle of the EMAs is important. So again, and you're under on the 4 hour. Okay, so you're under on every single time frame. Let's go to, except for the weekly, I believe. Even the daily, where we're at on the daily, under the 200. Okay, that's bearish. And all these things can add confluence and add to your trade, but just the simple stuff that I did at the beginning can tell you a lot. If I identified the trade without any moving averages, but by just using trend lines. And oftentimes the moving averages just reflect what's going on with trend line, right? Crossovers, breaks, right? Breakouts, right? So there's a lot of ways to trade, but to simplify everything, trend lines are the holy grail, in my opinion, and all other indicators vouch for what is happening, whether we're bouncing off a trend line or we're breaking through a trend line. All they're doing is identifying what's happening with these moving averages, what's happening with the trend line. Okay, so hopefully, let's see, anything else. Also the volume, the VWAP, I've been using more and more lately. And on this trade, it was tough because normally if you're below, just like the 200, below the VWAP, then normally we're going south, right? But we're fighting it for a while. We're on the border for a while, so it was hard to tell. But oftentimes this is a good moving average or a good other trend line that you could use as support and resistance. I've been using it more and more. And also you could also use volume profile, which was not a big factor in this particular trade. And if you watch my last video, you know that this point of control from the prior session, right? Not the current one that I'm in, but the prior session. So this middle line, it was where most of the volume was at, right? And so price is gonna either bounce off of this line to the upside or to the downside in the next session. So now that we're in the next session, in my opinion, like we're right there, right? We're right at that point of control. So where my dotted line's at, we already bounced off of it. So for me, in my opinion, like I was thinking we're coming down, right? We're coming down off of the POC, the prior POC, because it tried to hit it up right here. And plus we got all these borders, right? We got all these borders. We got the 200 EMAs on top on every time frame except for the weekly. And so all that information essentially told me was that once we got up to any level close to the point of control from the last prior session, which is right here, guys, right here, literally it tapped it, right? It tapped it this to there, yeah, almost tapped it exactly. And so price bounces pretty hard off of it, and you can see it happen here after several attempts of trying to cross over it. It broke through it. So you can use all these confluences to your advantage, all this information, take it as you will. I'm going to continue to do these on a daily basis. I'm gonna try and make them a little shorter, but hopefully you guys start to gather my thinking and the way that I trade by understanding a lot of the different indicators and the confluences I use to justify my actions. All right, guys, I will see you in the next one. Take care.